If you're an accountant, CPA, or tax advisor, and you either use sales tax software or you're thinking about using sales tax software in order to manage your client's sales tax, there's a couple of things that you should probably know before you start using it. There are really three big areas where we see our CPA and accounting partners get into trouble if they're using sales tax software with their clients. The first has to do with nexus, the second, product taxability, and the third, tax settings. The reason why this is so important is because if there is some sort of issue that's happening with your client, it is ultimately going to create a problem for you. Any sales tax issue that goes unnoticed and then becomes a bigger problem later on, that's a problem that you're going to have to clean up and you might ultimately need to pay for. In fact, we've seen this happen in litigation previously with accounting companies, and we certainly don't want that to happen to you. So let's talk about Nexus. A lot of these apps, like say TaxStar or Avalara, they'll have a free Nexus tool, but really it creates a false sense of security that you're able to accurately determine what states your clients have sales tax nexus in. So let's dig into it a little bit. The first thing is that most of these tools are just talking about economic nexus. And there are many different ways that your clients can get nexus in a state besides economic nexus. Let's say having a physical presence through storing inventory in a warehouse, or having contractor employees, or visiting and attending trade shows. There's really a super long list of ways that your business can create nexus, and economic nexus is the newest on the scene. It's the easiest to understand, but it is by no means comprehensive. And so with these tools saying, oh, just use our calculator to figure out where your clients have nexus, it's really only telling half the story. And the other issue with these economic nexus tools is that they are inaccurate. They're inaccurate. Why are they inaccurate? They're inaccurate because they are just looking at gross sales. When we look at a state's economic nexus law, it's really complicated, okay? Some states are going to be based on gross sales, some are going to be based on taxable sales, some want you to include, some want you to exclude marketplace sales, resale orders. And so if you're just using total sales in a state, it's more likely than not that you're going to have a false positive. Another thing is that it doesn't properly take into account product taxability. So if a state, for example, doesn't tax, let's say, dietary supplements or clothing, it's going to say that you now have nexus in a state when you might not need to. Let's say their economic nexus threshold wants you to deduct non-taxable sales. So let's say you told the client, hey, you have nexus in the state, but they didn't really have it. And then there's some other issue that pops up later on with a tax collection issue, or they're under audit. You're just creating opportunities for there to be some potential exposure, for there to be some reason why things break down, and then ultimately the client or you are going to be responsible. We want you and your clients to only be paying sales tax in the states that are absolutely necessary, because if your clients have permits in a whole bunch of states, maybe they're just super patriotic and they want to help facilitate the collection and remittance of sales tax to a bunch of states, but I think that's probably not the case. What you're really doing is opening yourself up to more opportunities for audits, for questions, and for things to just go wrong. So that was economic nexus. The second thing I want to talk about is product taxability. So product taxability is something that can go wrong when it comes to sales tax software, and it can be so expensive for your clients if there's some mistake. And by extension, it can become a really huge headache and an expensive problem that you will need to clean up. So let's just start with the basics. What is product taxability? Product taxability is whether or not a state charges sales tax on a particular type of product based on that product's definition. So some states, for example, have exemptions for dietary supplements, for clothing, prescription drugs, professional services. There's a whole host of different kinds of products. And the thing is, software is not going to be able to fully understand the nuances of the exact nature of the products that your clients are selling and whether or not they fit within the definition that the software has provided. So let me give you an example. An app like TaxShar, for example, might have a tax code that just says dietary supplements. What does dietary supplement mean to TaxShar, and what does dietary supplement mean to your client? I'll give you an example. We've got a client that sells CBD products, and they will insist up and down that it's a dietary supplement. But I can tell you that in the vast majority of states that have a dietary supplement exemption, they do not include CBD products within that exemption. Had you just set up the software, or your client set up the software and just check the box for dietary supplement for that product, it would not have charged sales tax when sales tax was due. So imagine your client's under audit. They've been selling something into a big state, I don't know, like California. They weren't collecting tax on a million or maybe millions of dollars of orders. There's now hundreds of thousands of dollars of tax that are now uncollected simply because you were not aware of all of the little details. And unfortunately, in sales tax, the devil really is in the details. And this software, it really likes to paint this picture that it's all so easy, just check a few boxes, set it and forget it. But ultimately, what happens is that businesses and their advisors like you later figure out, maybe years later, whoa, this is actually way more complicated. This is not something that we just want to connect an app with, because the potential for mistakes and the potential for this blowing up and becoming a huge, super expensive problem is really high. I mean, I'm not going to say that it's like the highest chance in the world, but what's that quote? It's like, you feeling lucky, punk? Are you? I mean, we're seeing an average of 5% of businesses under sales tax audit in 2023. Are you confident enough to know that if 5% of your clients were subject to a sales tax audit and you were the one responsible for making sure that all the sales tax was done correctly, that your client's going to be able to not owe anything under audit? Because if they do owe something under audit, you're the one that they're going to be looking to, because they're going to be like, WTF, why am I paying money? Are you going to be crediting me this $30,000 or whatever it ends up being? So the third issue that we see with sales tax software that can create a huge problem for your clients and then a huge problem for you is if there is a sales tax setting issue that goes unnoticed. So sales tax settings are like one of the most important aspects of sales tax, and the software doesn't do anything with it. It doesn't manage it for you. Most of the time, it doesn't even calculate the tax for your shopping carts. You actually have to go and set up the sales tax settings in the shopping carts. So what do I mean by sales tax settings? Let's say your client's selling on Shopify. Someone needs to go in there in the states where your client has a nexus and where the products are taxable and actually set up how the product should be taxed in the state. Should the product be set at a lower rate, for example? And there's so many particular challenges with each individual sales channel, and your client might be selling on 5 to 10 different channels. So every time they create a new product, they roll out a new product, that needs to go and be set up on the sales channels, and someone needs to be periodically checking in to make sure that the sales channels are still accurately calculating and collecting tax ongoing. What are some ways that this can go wrong? Well, let's say your sales channel just stops collecting tax on a certain category of products. The software is not going to notify you. The software is like, let's say TaxShare, for example, it's still going to be calculating how much tax you owe and paying that to the state every single month, even if you weren't collecting any tax. So that could like eat up the entire margin for a certain product line. Why could this happen? There's 1,000 different reasons why there could be issues with tax settings. It could be a glitch or some sort of update with the sales channel. It could be that there's a plugin that your client just connected that is now overriding the tax settings. It could be an intern. We've seen this, an intern went in and accidentally unchecked the box. Well, unchecking that box, it could be a 2-second mistake that could cost literally hundreds of thousands of dollars if it goes unnoticed. So one of the things we do for our clients is we actually will sort of cross-reference how much tax did they calculate, how much did they collect, and are they still collecting about the right amount? When I say about the right amount, we're looking at like 99.8% accuracy, right? Because you're never going to be like exactly right for a whole bunch of reasons, but we're looking to get extremely, extremely close. And that's a whole hell of a lot better than your client just not collecting tax at all on a certain product line. So These are three ways that sales tax software can create a huge, huge issue for your clients, and then by extension, yourself. Anything that happens to your client, you're going to have to deal with, you're going to have to clean up. And so it doesn't really matter whether or not you were using software, your client's still going to be looking to you if there's an issue to say, hey, I'm paying you for this. I thought that you were going to be managing it all for me. Why do I owe money here? Why am I getting this notice? Why am I getting this assessment? The clients don't care. The clients don't care if you're using a tool like TaxShar, Avalara, or whoever. They don't care if you're using an abacus. They just want to know that it's being dealt with correctly. And so, our experience is that if there's any amount of sales tax due under audit, the clients are going to want you to pay for that. Are you well versed enough in sales tax to be able to confidently say, yeah, we'll cover that because we are, this is the only thing that we do? I mean, just imagine a client missing a single state for a few months because they had Nexus, but you were just using that economic Nexus tool from an online website and a state was missed. Could literally cost your client hundreds of thousands of dollars. That's a lawsuit, right? Like someone's going to get sued. And we certainly don't want that to happen to any of your clients or to you. Like sales tax is complex. It is super complicated. It's not as complicated as brain surgery or rocket science, but it's like probably number 3. And unless this is the only thing that you do, or you can get away with charging like super high rates, it's really, really hard to make this profitable, and it's really hard to make it fit within your workflow. So if you're looking to provide sales tax coverage for your clients, make sure that your clients are not owing money under audit with sales tax, and you don't want to be the one responsible for if something goes wrong, and you still want to maybe earn a little bit of money, then consider checking out our partner program. We partner with high quality CPAs, accountants, bookkeepers, tax advisors to make sure that their client sales tax is being taken care of. You can find out more at thetaxvalet.com. Thanks.